Hello, my name is David Winch. I'm a forensic accountant with Bartfields Forensic Accountants. And today we're going to spend about 30 minutes talking about bank account freezing and forfeiture orders. It is a topic that we could spend a full day talking about, so we're going to cover just some basics and just get the fundamentals in, hopefully. Okay, so what's the agenda? We'll talk a little bit about some PoCA history, which is relevant. And then what are account freezing and account forfeiture orders? Where and how do these proceedings start? Reacting to an account freezing order. What is meant by recoverable property, which is a phrase that features largely in relation to account freezing and account forfeiture. Account freezing and tax irregularities. And HMRC seem to are something that they are quite keen to use at the moment. When freezing moves to forfeiture, and then finally a little bit about how Bartfields Forensic Accountants can help you. Okay, so let's kick off. Some PoCA history. The 2002 legislation, as it was originally enacted in 2002, dealt with, amongst other things, the detention of cash of £5,000 or more. And cash here is fairly widely defined. It certainly includes, of course, folding money and so on, but it also included things like postal orders. Initially, the cash could be detained for 48 hours, but that was extendable by magistrates up to a maximum of 2 years. And of course, we're talking about something which physically exists here. Where the cash was recoverable property or intended for use in unlawful conduct, it could be detained. And a seizure could happen anywhere within the UK, whereas under earlier legislation, it covered things like airports and so on, but didn't cover, as it were, ordinary UK. This PoCA 2002 extended the cash seizure beyond airports and such places to the UK generally. And detained cash could subsequently be forfeit following a successful application for forfeiture to the magistrate's court. So that was the 2002 legislation with regard to physical cash. The Criminal Finances Act 2017 added new chapters to the Proceeds of Crime Act 2002. And again, these new chapters we're talking about here are related to the assets. They're not related to the individuals who own the assets. To use technical terminology, we're talking in rem rather than in personam. So one of the additions in the Criminal Finances Act 2017 was the detention of listed assets having a value of 5,000 or more, initially for just 6 hours and then up to 48 hours. But that was extendable by magistrates up to a maximum of 2 years. The asset had to be of a specified type, for example, expensive jewelry. And it had to be either recoverable property or intended for use in unlawful conduct. And we will come on to say what we mean by recoverable property a little bit later on. And again, could be seized anywhere in the UK. And again, a listed asset having been detained could be forfeit and realised following a successful application to the magistrate's court. So you can see how the listed assets regime follows on from the cash detention regime. But the Criminal Finances Act 2017 went further, and it dealt with the freezing and forfeiture of monies in bank accounts. Now, of course, these are not a physical asset. But again, there's a similarity between the structure of this and the original cash detention and forfeiture proceedings. So, what are account freezing orders? Well, they're orders which prohibit the withdrawal of monies or the payment of monies from an account by the account holders or by anybody beneficially interested in the account or a signatory on the account from an account with a relevant financial institution. And usually we're talking about a bank account or a building society account. The account freezing order is made in the magistrate's court on an application by the police or the National Crime Agency or the Serious Fraud Office or HM Revenue and Customs by an officer from one of those bodies or an accredited financial investigator. An account freezing order can be obtained without notice, can be obtained ex parte, but often they're not. And there's a reason for this. They can be obtained ex parte because if there is a danger that if notice is given to the account holder, the money will have gone, evaporated before the account freezing order can be made, then clearly that will defeat the whole object. So in those circumstances, the application can be made without notice and ex parte. But in practice, very often we're in a situation where the bank account in question has already been frozen by the bank or by the building society, perhaps because they have a suspicion of money laundering, and therefore they've possibly made or thinking of making a suspicious activity report to the NCA under Part 7 of PoCA, so they've frozen the account. And of course, if the account is already frozen, then that danger of the money evaporating is not there, and the account freezing order can be applied for with notice, and the account holder has a few days, and it is a few days, to get his act together and get himself into the magistrate's court or to be represented in the magistrate's court to oppose the order or seek some variation of the order. Talking of opposing and varying, the account freezing order can be tailored to exclude, and by exclude here what I'm meaning is exclude from freezing, so allow reasonable personal living expenses. It can also allow business expenses, so a trade or business can be carried on through the account even though it's subject to a freezing order. And perhaps importantly for lawyers, it can also be set up to exclude legal expenses. In other words, to allow legal expenses to be paid out of the frozen account. Now, where that happens, that exclusion can be tailored as to the amount or as to who payments to be made to or whatever. So if you are XYZ lawyers representing somebody with an account freezing order, the order might be varied to allow payment to your firm in respect of legal expenses. And unlike the confiscation and restraint order situation, those legal expenses can cover these very proceedings that we're dealing with. So there's an important opportunity there, if you like, for the account freezing order to allow legal expenses, to allow personal living expenses, and so on. If you're in a situation where somebody has multiple bank accounts and just one of them is being frozen and he's got other sources of funds and so on, then of course you're not likely to get that exclusion because the magistrates will simply say, well, he can use the money out of the other accounts to pay his legal expenses, to pay his living expenses, to run his business. But where the account freezing order covers all of somebody's accounts or covers his only account, then clearly he could be in some difficulty if he can't get money out to go shopping at the supermarket or whatever. So be aware of these opportunities to tailor the account freezing order. And typically an account freezing order is made for 6 months, but it can be extended for up to 2 years from commencement. And as we will come on to later, in practice, it can extend longer than 2 years from commencement. And I'll explain why when we get there. But certainly in the account freezing orders that I've seen, the initial period has been set, say, at 6 months, to allow inquiries to be made by the authorities as to where money has come from, what is happening with the account transactions. And also that, of course, allows time for the account holder and his legal team to get together information and evidence to seek the variation of the freezing order or the setting aside of the freezing order. It's made where there's at least £1,000 in the accounts covered by the order. And as I've already mentioned, it can be varied or set aside on an application by anyone affected by the order or by an enforcement officer. So anyone affected by the order doesn't mean just the account holder, and an enforcement officer doesn't mean necessarily the enforcement officer who originally obtained the order. So an application can be made to the magistrate's court to have the freezing order varied, to have it set aside, or indeed extended. And what's this all about? Well, it's made on the basis that some or all of the money in the account is either recoverable property or intended for use in unlawful conduct. And just to be clear, when I say intended for use in unlawful conduct, I don't mean necessarily intended for use by the account holder in unlawful conduct. It could be intended for use by somebody else in unlawful conduct. And unlawful conduct basically means criminal conduct, conduct which would be criminal in any part of the UK. Recoverable property, we will say a little bit more about later on. What about account forfeiture orders then? Well, account forfeiture orders relate to monies in an account which is already subject to an account freezing order. So the account forfeiture order is not ever going to be step one. It's going to follow on from an account freezing order. It's made in the magistrate's court, again on an application by the police, National Crime Agency, Serious Fraud Office, HMRC, or whatever. And the account forfeiture order, as the name suggests, results, if successful application is made, results in the forfeiture of the amount specified in the order. And that could be the entire balance of the account, or it could be a smaller specified sum. So that, for example, if somebody's got £10,000 in a bank account and the police, let's say, have satisfied themselves that £5,000 of that is proceeds of a fraud, then they can apply for the forfeiture of that £5,000 out of the 10. They are made on the basis, and we see this wording again and again, they're made on the basis that the money to be forfeit in the account is either recoverable property or intended for use in unlawful conduct. So again, it's a bit like the cash detention and forfeiture, except that instead of dealing with a physical asset, we're dealing with a bank account balance. And we're following basically the same procedure of going through, freezing it first of all, detaining it in terms of physical cash, freezing it in terms of a bank account, and then moving on to an application for that to be forfeit, and if successful, it is forfeit, and it goes into the government coffers. So where and how do these proceedings start? Well, as I've mentioned, an account freezing order is always necessary before there can be forfeiture. And the proceedings start in the magistrate's court and remain in the magistrate's court unless you get right to the end of the road and there's an appeal. As I've mentioned, the account in question may and often will already be frozen by the bank or the building society because they've got a suspicion of money laundering. So in practice, what the client may notice first is that his bank account seems to be frozen. And he talks to the bank and they basically don't tell him anything, won't explain why it's frozen, won't tell him what's going on, and are generally unhelpful. And of course, the reason they are generally unhelpful is because if they've got a suspicion and they're pursuing a suspicious activity report, then they are concerned about tipping off under Part 7. And so they are not going to provide, the bank are not going to provide their customer with the information that they have a suspicion and they've made a report. So first thing the poor customer may know is that his account is frozen and he doesn't know why, and he can't get anybody to speak any sense to him. Then when an application is made for an account freezing order, a copy of the application is served on the account holder. As I said, if the bank account is already frozen, then it will be served in advance of the hearing at the magistrate's court. Of course, if it's an ex parte without notice application, he will get that after the order has been made. And that application will indicate the basis on which freezing is considered appropriate and the length of time for which the freezing is sought. And as I've said, typically 6 months, and in practice, what I've seen very often is an initial period of 6 months, and then the applicant coming back to court before that 6 months ends and says, we are still making inquiries, we haven't got to the bottom of this yet, can we have another 6 months and another 6 months and so on. And as I've said, the maximum period is 2 years from the start of the freezing period. So how do you react to an order or an application? Well, if the account holder wishes to object to the order or application, which I assume he will, although perhaps I shouldn't assume he will, sometimes not. Sometimes the account holder will simply think, I haven't got a leg to stand on here, I'll just let it go. Let the money go and call it a business expense in my own mind and just say to heck. If he is going to object, then it is necessary, of course, to address the bases for the suspicion which has been set out or should have been set out in the application. And if it isn't fully set out in the application, then you need to get that information from whoever has applied for the order. And of course, there will be details of who that is on the application. It may be that your approach initially in reacting to an application for freezing order is not to oppose it 100%, not to ask the magistrates to make no order, but rather to say we need some care to be made in this order. We need it to be tailored so that our client can still live his life, pay his shopping bills, run his business, or whatever, and pay his legal fees. So it may be appropriate to seek those exclusions to be written into the order when it's made. And of course, if they're not written into the order when it's made, then you can go to the magistrate's court and apply for the order to be varied to put those exclusions in. Of course, the more evidence which you can produce in support of objections, the better, and that may include the report of a forensic accountant such as myself. So, for example, if you are saying that this particular client needs £1,000 a week for living expenses, for his reasonable living expenses because of the way he lives his life, then it would be useful, wouldn't it, to have an accountant's report looking back at over the previous, say, 6 or 12 months as to what he's actually spent and what he's spent that on, to justify that it being reasonable that he needs £1,000 a week to live on. The Magistrates' Court will reach its decision on the balance of probabilities, and all of this stuff is dealt with on the balance of probabilities on the civil standard. It is in fact a civil set of proceedings in the Magistrates' Court. Where a freezing order has already been made by the magistrates, as I've said, it can subsequently be varied, and you can make that application if you are a person interested or affected by the order. It doesn't have to be the account holder. But perhaps in consequence of that, the magistrates may well take the approach that they will, on the initial application, they will make the freezing order. They will make the freezing order that they requested to make to stop the money evaporating and to allow time for evidence to be gathered and analysed. Because they know, don't they, that if it comes to it when the evidence is considered that everything is absolutely bona fide, then they can vary the order or they can set aside the order, and I was going to say no harm done. Well, no, it's not no harm done. There's probably a fair bit of harm done to the client and his financial affairs and confidence in him. But one can see why the magistrates might be tempted to err on the side of making an order rather than to err on the side of not making an order. As I've said, anyone affected by the order or an enforcement officer can apply to the court for the freezing order to be varied or extended or set aside. I've used the phrase recoverable property. There are, I think it's 7 sections in the Proceeds of Crime Act 2002 that define recoverable property. But the essence of it is this: at its simplest, recoverable property is property obtained by or in return for unlawful conduct. In other words, very similar to criminal property in confiscation. However, when the property is now held by a person who obtained it from someone else, and that other person obtained the property by or in return for unlawful conduct, it can get a bit tricky. As I say, we haven't got all day to talk about this. There are circumstances in which a person can obtain property bona fide for value, and it ceases to be recoverable property, even if in the hands of the person he obtained it from, it would have been. And there are cases where it remains recoverable property because of the relationship between the people who have passed it to one another. So all I can say is it's not necessarily the case that the unlawful conduct that we're talking about is unlawful conduct of the person who currently holds the bank balance. I mentioned HM Revenue and Customs and tax irregularities. HMRC have been making considerable use of account freezing and account forfeiture recently. Now, there is, if you like, a technical issue there in that if somebody evades taxes, let's assume, to make it simple, that they dishonestly evade some tax liabilities. What is the recoverable property? Well, I think the way that the courts will look at this is that because there has been an evasion of a liability, they are likely to take the view that all the money in the account is tainted by that evasion. So although you can't point to a particular sum and say, this money I have because I have evaded that tax bill, the courts, I think, will accept HMRC's view that if there is tax evasion in relation to a business, say, that's operated through a bank account, then the balance in the account will be recoverable property. From the revenue's point of view, these proceedings are relatively inexpensive and swift as compared to a criminal prosecution. And decisions are made by the court on a balance of probabilities rather than the criminal standard of burden of proof. So from HMRC's point of view, this is all good. Where tax irregularities have continued for some years, then the tax lost might easily exceed the balance that's in the bank account, which is the amount sought to be frozen and ultimately forfeit. So it's not ideal from an HMRC point of view. It's kind of a bit arbitrary because what somebody might have in a bank account may have no direct connection to the amount of tax that they have evaded. But it gives them a good place to start in grabbing some assets and getting some money off the suspected tax evader. Okay, let's talk quickly about when freezing moves to forfeiture. An account forfeiture notice may be issued at any stage whilst an account freezing order is in effect. Now, I have to say, from my point of view, if you reach account forfeiture, you should already have, when you were aware of the account freezing, you should have already moved to assemble the evidence that you need to get the magistrates persuaded that the monies are legitimate, if that is the case. I wouldn't ever advocate waiting until you get a forfeiture notice before starting to act. Having said that, clients are clients, aren't they? They sometimes do wait until the last minute with their head in the sands before acting. So hopefully, long before you get to an account forfeiture notice, you have already done your work, got your information together, instructed a forensic accountant if need be, got his report and so on. You've marshalled all the evidence. And so hopefully you don't even get to an account forfeiture notice. But anyway, an account forfeiture notice may be issued at any stage whilst an account freezing order is in effect. One of the consequences of that is that it stops the clock on the 2-year time limit. You remember earlier on I said that an account freezing order could last for 2 years or longer. Well, the or longer is because if there is an application for a forfeiture notice, if there's a forfeiture notice, then the clock stops and the 2 years can drag on into 3 years or whatever. The account forfeiture notice will specify a period in which objections have to be made, and usually that's 30 days. And the objection has to be in writing. You have to file, or your client has to file, or you have to file on the client's behalf, a written notice of objection within that 30-day period to prevent forfeiture going ahead. The Magistrates Court may order the forfeiture of any money if it is satisfied that the money in question is either recoverable property or intended for use in unlawful conduct. So right the way through, we've got the same test of, is it recoverable property or is it intended for use in future unlawful conduct? And a forfeiture order or a decision indeed not to make a forfeiture order may be appealed to the Crown Court. Okay, that was a 30-minute whistle-stop tour of account freezing and forfeiture orders, which I hope has been useful. Can I just remind you how Bartfields Forensic Accountants can help? We are a part of the Sedulo family of companies, which offer a full range of financial services for businesses and individuals. We undertake legally aided and privately funded criminal and civil forensic accountancy work, and have a team of experienced and highly trained forensic accountants, analysts, and support staff using the latest IT facilities in our offices in Leeds, in Manchester, Liverpool, and London. You can find more on this topic and other topics on our website in the Insights area, and this and previous webinars can be found on the Seminars section of the website. We'll send you a recording of this webinar by email, or a link to it, within the next few days. In the meantime, if you have any queries, you are welcome to email me. My email address is there on the screen. The phone number is there as well. Having said that, a lot of the time I'm not in the office, and it is much better really if you email me the basics of your question. Thank you very much for your time, and I look forward to seeing you again in a fortnight. Thank you. Goodbye.